I can justifiably say Leagold Miller is a well-established firm of advisors, and we've helped our clients achieve their financial goals over the last 130 years. Not many people can say that. Make wise decisions before and during retirement.
The things that you do in retirement are going to be very specific to you. 1, what is my retirement number? The salary that you need to replace when you stop working. 2, have I got enough? Pensions, property, other assets. Is there enough to deliver that retirement number? 3rd one, will it last? You're going to be spending 30, potentially 40 years plus in retirement. So you need consistency and you need certainty of income for your varying spending needs. Retirement does not equal pensions. Most wealth is concentrated in 2, maybe 3 places. So it's going to be your house. The second will be your pension and maybe your business. Those will be the 3 main assets that you have. The reason for this is your financial plan should contain tax-efficient building blocks.
The returns that you got in the 2010 super high, right? Much better than expected. The US stock market went up about 2.5 times better than what you'd expect each and every year for 10 years. Phenomenal period. And it was relatively smooth sailing. Your blip here, 2018, and of course 2020, very volatility. Inflation is at a 40-year high. Interest rates are rising consistently for the first time in over a decade. And Big Daddy Bear, volatility is back. Big change is happening in the environment. This is impacting on the markets. What we're seeing is a ton of strategies that, according to our research, may struggle going forwards. And there's a high risk they could be in your pension. Hence my question. Is your pension investment suitable for this new environment? We believe spread your money across not just stocks and bonds, but also hedges against inflation, dedicated income generating strategies, and something called absolute return. We've got a team of about 120 investment professionals, very intelligent, very qualified, experienced, just as you expect. Now they're located in all these different areas that we invest, extra insights, local knowledge, which should spread your money across 6 asset classes, 24 sub-asset classes or geographies, 78 managers. In total, your money will be spread over about 15,000 individual stocks, bonds and commodities. This will help you to deliver the right return experience from this new environment and actually future environments, whatever they might look like.
To tell you what an LPA is, to enable somebody to help administer my affairs whilst I'm still alive, but I'm mentally incapacitated. So how's a mortgage going to get paid? It's going to be a problem. If your direct debit fails, they won't be able to take your mortgage payments. During an incapacitated event where one of the account holders has been incapacitated and that account is effectively frozen, to utilise that account is technically a criminal offence. I had a friend in his 20s, he walked out the door and a bus literally ran him over, and the next thing was he was incapacitated for many weeks. You don't want that to happen. There's a lady, true story, who's got a T-Mobile phone account, who's now owned by E. Can't cancel the account because the lady has mental incapacity, because they have no contractual right to do so. Who's going to write your will? Who's going to prepare that document? This is something that has to speak from 1 second before or 1 second after your death. So that document has to be on the nose. Even a comma can make a big difference in your life. The difference between my bank account standing with NatWest Bank and the difference between that and the NatWest account standing with NatWest Bank could mean somebody receives 0 from your account, which is exactly what happened. If any of you have got divorced, that's just ended your physical marriage, but you still have a connected financial marriage. Imagine husband and husband. Anthony and I are married. Anthony's got loads of cash. We then get a divorce. Anthony remarries. He's now excluded from making a claim against me. But I haven't remarried. 50 years later, he's won the lottery. I now make a claim for the ending of our financial marriage. That makes sense? And I could do it 50 years later. A will is your MOT for the year. Do it every year. Every single year. The last will is the will.
So really, there's only 3 questions. What is my retirement number? Is there enough to deliver that retirement number? And 3, will it last? The reason for this is your financial plan should contain tax-efficient building blocks. You could potentially draw up to £50,000 in income in retirement before you start paying tax.